Welcome to the Property Pulse podcast. Today, I'm very excited to introduce you to Matt Rutherford, Director of Diagno Accounting and Financial Strategies, and a seasoned expert with over 20 years' experience in the accounting industry. With a deep understanding of business and investment needs, Matt has been a trusted partner to clients throughout his personal and professional journey. Join us as we explore Matt's insights on strategic financial planning, business growth, and the unique role of accountants in guiding clients towards their financial success. Let's jump right in.
Welcome to the Property Pulse podcast, your prime source for Southeast Queensland real estate insights. Understand the latest property data in Queensland to grow your net worth, as Geoff Tomkins interviews industry experts to give you the latest market updates.
Hello everyone, and welcome along to another episode of the Property Pulse podcast. I'm Geoff Tomkins, your host and founder of GCT Property, dedicated to helping you navigate the real estate market in Southeast Queensland and beyond. Today I'm very excited to introduce you to Matt Rutherford, Director at Diagno Accounting and Financial Strategies. With over 20 years of experience, Matt brings a wealth of experience, particularly in helping individuals and small business owners achieve their financial goals and maximise their tax savings. Welcome along, Matt.
Thanks, Geoff. It's great to be here. First time in the podcast world for myself, so glad to be giving it a go and giving you some information that will hopefully help some of your clients out. So
excellent.
Yeah, glad to be here.
Thank you. Yeah, certainly will, and thank you for your time today. So just before we get underway, I'd like to just add a general disclaimer. The advice we give today is of general nature. It does not take into account your specific needs or circumstances into consideration. So, of course, we always recommend that you look at your own financial position before making any decisions. Awesome. Okay, so let's get into a few questions and really the juicy topic of accounting and tax savings, Matt. So first question is, can you please explain a bit about your history and experience in the accounting world?
Yeah, so I've been in the accounting industry for over 20 years now. I started in the early 2000s and around the introduction of the GST back in Australia back then. So I think that was a fairly major tax event in our country back then. So I was coming in essentially off the back of that. So yeah, that's where I started. I started in a very small accounting firm while I was studying at university, doing a Bachelor of Business in accounting. So yeah, I started through that, and through then I've always been in the small type of accounting firm. I've never gone into the big end of business. It's never been an interest of mine. I could say I've always enjoyed working with the smaller type of clients.
Right.
Never wanted to really get into the bigger end of accounts. So yeah, it's been a great journey of working with many different clients over that time, whether they're employed, self-employed, investors, and self-managed super funds as well in there. So yeah, and over that time, I think the GST has been probably one of the biggest tax overhauls in our system. Like over the 20 years, I've seen many small tinkerings with our tax system, but there hasn't been any major overhauls since then.
Okay.
Yeah, so that's basically been my experience over the last 20 years. So yeah, I've definitely seen a lot and try to help a lot of people along the way. So
I think you certainly have, Matt. On a personal level, you've been looking after my business, my investments, and I've also recommended you to family and friends, and I must say all the feedback's been very positive. Matt, you've really explained things on a simple level that we can understand, and very detailed, and very good advice, and never had any issues with your business. So I think Diagno Accounting is outstanding in the industry. Okay, so I know with the ATO, it's constantly looking at changes and revising the tax laws, and I understand it's very important to be aware of that. We're all, in small business, we're very busy running our day-to-day businesses, and we don't have time to keep on track of that. That's your role. So please explain just briefly to the audience how do you manage those tax changes, and how are you aware of them before they happen, or is it a sudden shock when they come into play?
No, it's very much like we do get or we do hear about changes that are coming. Like the government are very good at talking about different things that they want to do. But at the end of the day, it still needs to go through the processes of their parliament and things like that. And sometimes they can change very quickly, and other times they can be very drawn out. So, and there's some things that are good for the industry and for clients, and other things that aren't great. So, like we work, or I'm a CPA member.
Right.
So our associations are very keep us up to date or in the loop with, all the changes that are going on, or all the prospective, legislation that could be changing. And the good things, as I say, like, you're happy to go with, but the ones that aren't great, like there's ones at the moment that they definitely push back on against, whether it be the tax practitioner board or the government, to say this is not a good idea. Please have a look at it and come back with another submission. So yeah, it's CPA, and then there's other associations out there, NTAA being another one. They're very active out there giving, lots of information for accountants, like keeping us up to date with what's going on in business, what's going on in the investment world. Just so it gives us, a lot of ammunition for when we have to meet with clients, and especially around tax planning and things like that. We want to get the best outcomes for clients at the end of the day, so we don't want them overpaying tax in any way, in any shape or form. So, so we're definitely out there actively getting as much information as we can.
Yeah.
So, we can serve our clients the best that we can. So, yeah.
Sure. That's a good thing to hear, that there's a bit of consultancy in the industry. It's not just a blanket bring in a policy and everyone's shocked. It's good that they sort of do consult. The ATO consults with you as accountants, because you're the ones dealing with us as business owners and individuals to make sure that it's going to sort of work. So leading into the next question is all about, technology. So I know technology's changed massively. You've been in the industry since the early 2000s. I'm sure you've seen a lot of changes. I think some technology changes are really good and beneficial. So just please explain it related to accounting, how's that helped us as business owners or individuals, and how it's helped you as an accountant with the technology upgrades and changes.
Yeah, well, it's been a great thing. Like I like even thinking back to then, like writing manual journals and things like that. It's come a long way from there now. So we mainly deal with Xero. We're a Xero practice now, and I know a lot of people would say and sit there and go that it's a business application. It only applies to business. We actually have a couple of property investors that use Xero. They've got a cash book module, and they purely use that just to manage their properties. Wow. And like, it's not for everybody, I understand that, but it just shows that, it's part of the technology that people can use. And it makes our job easier at the end of the day, because when they feed the information into that program, it's easy for us to get an income and expense summary at the end of the year. And I'm also aware there's probably other rental property applications out there for people. I haven't come across any yet, nor have I had any clients saying you need to look into this, but I'm aware that there could be those type of things. But at the end of the day, what we find is, clients having, a good property manager that can manage their income and expenses. And then it's just having a knowledge of whatever the rental or whatever the property agent is paying, that the client has to keep a record of what they need to keep a record of. And so we try to guide people through that. Whether that's through technology, or we still use spreadsheets in this day and age. So whether they keep a spreadsheet and things like that of what they need to keep a record of. just works, whatever works best with the client.
Sure, and on a personal note, I've been using Xero for many years, and I find it great. You can look at all the figures really quickly. I'm sure, and then if we've got any questions as a business owner around the tax, I can have a discussion with you. You can log into my Xero and see where we're at and clarify. I know we sort of catch up every now and again where there's something I need to clarify. You're very good at that, and it's very easy with Xero. And in terms of, that was a great point you mentioned about property managers. A good property manager, should have all the expenses if they've run through. The property manager pays them, and then generally the property manager will get the end of year financial statement, which I upload and I send you directly, which makes it a real smooth process. And technology has definitely helped us as property investors. Okay, so as a property investor myself, I understand cash flow of an investment property is really important to understand that income and expenses. And I know I've built new high cash flow investment properties myself for the benefits. So from a tax point of view, Matt, can you please just explain some of the benefits of a brand new investment property compared to an existing house or unit?
Yeah, the first main one would be the interest on the mortgage. So when someone gets a new property, more often than not, you're going to get a new mortgage for that property. And one of the main deductions of that would be the interest charged on that mortgage. So that being the first one. And then the second one would be getting a depreciation report from a quantity surveyor. So when you build a new property, essentially the new build and if all the new fittings and everything inside that property can be depreciated and can be claimed as a tax deduction. So with the building, it can be written off over 40 years. So a quantity surveyor would work out what the deduction would be over that 40-year period. And that deduction is the same for every year. And then the fixture and fittings inside the house, that's a bit different. But essentially, again, you'd be able to claim the depreciation on those brand new assets inside that house. It can be a bit different, though, if someone comes and buys an existing property. You still can go get a depreciation report. That's fine, because even if you bought a property that, say, was built 20 years ago, there's still some ability to claim that capital works on the building for that additional 20 years still available. Right. The only change that came in a couple of years ago was that you can't go back and claim any existing depreciation on any fixture and fittings that are in that property. So that's the only change. But they would be the two main tax benefits, because at the end of the day, you still get the deductions for your council rates, your water, your insurances and things like that. So they're still there. But I understand that at the end of the day, and especially with any new investors, like cash flow isn't important. So sure, you do want to be getting back as much as you can from the taxman from your return. So yeah, the more you can get back, then the more it alleviates, the repayments and everything else that you have going out on the property each year.
Yeah, I think that's really important, Matt. Recently had a client built a new high cash flow property, and he was advised by some accountants that he couldn't claim a lot of the costs while the property was under construction. And I know you helped my client, and he got a great refund, and he was cash flow tight, and it really helped his financial position. So that was a great result, and just the importance of having a specialist like yourself that understands investment properties and what can and can't be claimed under the ATO to really maximise us as investors. And I know on a personal note, Matt, that really helped my client out, and he was really appreciative of your help.
Yeah, that's great. Yeah, good to hear.
Excellent. Now, the next question is a real bone of contention. I think it comes up pretty much every time there's an election.
Yes.
So some of the parties are proposed, changes to negative gearing. It's always a topic of contention that comes up. There's always a lot of discussion on it. We're in a rental crisis. People are struggling to get rental properties. So the government isn't going to alone solve the housing crisis. It's really relying on private investors to help build more property or create new buildings to help the situation. So please explain from an accountant's point of view what you've heard about the proposed changes and your thoughts, and how the likelihood of coming in or not coming in, and in relation to the past mutterings we've heard about negative gearing, which every time it's come up at an election and it hasn't really evolved.
No, that's right.
So what are your thoughts on this topic?
Oh, it's a hard one because it is out there, but every time they talk about it, there's no clear direction of what the changes are, or what the proposed changes are, and what effects they could have on the clients out there. So it's how big's a piece of string at the end of the day. It's there's been many theories from many of the politicians of whether it's capped to maybe exclude some the higher income earners, and it's hard to say because there hasn't never been anything clear on what they've been looking at or what the proposed changes would look like.
Right.
The only probably clear one that they have talked about is possibly changes with the capital gains discount.
Right.
With property investors. But again, whether they single that out to purely just property investors and no one else, I'm not sure. But it's hard to say. Like there's, as you said, there's a lot of talk out there, and it's hard to ascertain the effects of it. Like, do I believe there's going to be some change? Yes, I do.
Right.
And whether it may, fall down to the higher income earners, I'm not too sure. But again, it just all depends on votes at the end of the day, because at the end of like a lot of these things, when they've come up, they've been fairly big, what would you say, like, hand grenades essentially, where they could just blow up essentially in the particular political party's face.
Yeah, I think we saw a case of that when the Queensland government were talking about changes to the land tax, which I think it was last year, which was crazy. Talked about taxing investors on the land tax for all their properties. It's a state tax all around Australia, and that would have had a devastating effect for tenants, because it would have been less incentive for landlords to hold their investment properties or buy more investment properties. And my thoughts were it would just make the rental crisis even worse, and investors would leave Queensland. So luckily common sense came into play, and they had to sort of backtrack on that one. But I think that was a good example of they didn't really think it through. Common sense wasn't really part of the solution. If they'd consulted with property managers and investors and accountants and all that, I think that could have been, there must have been a lot of taxpayer money invested to go through those proposed changes, which really could have been better spent, I think, on providing more, government or social housing. I think I would have rather seen the money being spent on that on a personal note. So,
yeah, that's right.
Excellent.
Yeah, so it's hard to say. Like at the end of the day, you still want investors out there building, whether it's building houses or buying existing properties, for people that can't afford them, purely from a rental point of view. So you don't want to be, turning the taps too tight.
Yep.
Because in another sense, they've been also talking about with depreciation, increasing the capital works depreciation rate of picking that up essentially. So it's so it's a bigger claim, for rental property investors, for new builds. So in one hand, you're saying, we're happy to build it up and give you more here, and then on the other hand, we want to bring it back. So at the end of the day, I think the negative gearing one's a hard one. Like, I think at the end of the day, it might be more of a, twisting the taps on the capital gain discount more than anything, rather than changing the negative gearing. But at the end of the day, who knows?
Yeah, and I think, like the tax component of an investment property is a small part. We're seeing, strong growth in property prices. So for the majority of investors out there, the capital growth of the property has been very strong over the last few years. Rental incomes are constantly increasing. So I don't think it should be a reason why you'd buy or not buy an investment property. There should be bigger fundamentals at place in your decision, but the tax benefits will affect those that's sort of sitting on the fence, I guess, and not sure. But if you're considering property investment, which is really leading into our next question. So I know a lot of first-time property investors are really nervous and not sure how it all works. And from an accounting point of view, and I know the tax benefits can be quite substantial, and you really, as an investor, you want to really maximise the most amount of deductions you can legally claim for that property. So if you've got a new property investor coming to the market, bought a property or about to buy an investment property, new or existing, what sort of guidance would you give them about record keeping and all the expenses and all that sort of thing, reporting all that? What sort of advice would be helpful to them, Matt?
Yeah, well, as with some of the clients we've dealt with in the past that we've helped with, like, I don't know how many people know this, but like, especially when you're building a new investment property, you can still claim the interest and the rates on that property even before you start getting a rental income. So, so it's good to know that you can claim those things before things kick off. So that helps off initially. Then it's just getting a good understanding of because most people use a property agent, what expenses the property agent's covering, and then what you have to cover. So then you have an understanding of what information you need to keep a record of. So when it comes to tax time with us, you can say, here's the information that I've paid for the year, and this is what I can claim on top of what the rental, what the property agent's provided. So, but like with the property, like it's always good, a good way of just keeping a record of everything you spend on the property. At the end of the day, most things you can claim should be a tax deduction. But it's also, just to give people understanding, like if you make improvements on the property, whether you put something new in there, generally at the end of the day, those things have to be depreciated. So they have to be written off over a certain time frame. But other than having the depreciation report, they're the main things. But the main thing, what I like, whether it's us, whether it's another accountant, it's always good to talk to your accountant at the start, just to get a good understanding of what you need to keep a record of. So when it comes to year end, you've got the information ready, and you're not missing on any potential deductions that you may have spent on the property that could be missed.
Sure. And I think that's a good question to ask your accountant. As you said, it's got a couple of things there. If you're a new property investor, get a depreciation report that generally will be done by a quantity surveyor. If you're not sure, keep track of all records. Record keeping, I think I'm taking that advice is key, and then running it by your accountant, every expense and every bit of income, and then running it by your accountant. I know every end of financial year, I request a list of documents that you require. So new property investors, speak to your accountant, ask what they actually require. And again, with the technology now, it's much easier to upload, rental statements, income statements, bank statements. So a good accountant will, I think, advice out there to everyone that's a property investor. Make sure that your accountant, whoever you choose, is qualified, has worked with property investors, and is understanding the tax laws changes to maximise or minimise the amount of tax you pay. Well, thank you very much, Matt. I think it's been really insightful. On a personal note, you've been a very good accountant. I've worked with your company for many, many years, and the service has been really good. I do appreciate it. And some of these answers you gave today were great and give those investors real clarity. And I think anyone that wants to need a good accountant in Queensland should definitely reach out to Matt or myself, because I can highly recommend you as a company, Matt. So thank you much for coming along. It's been really insightful, Matt.
Yeah, thank you, Geoff. This has been good, and glad that you've taken me on my first experience of a podcast. So
it has been
hoping that I could have given some help out there to some people.
Oh, fantastic. And I think we'll just keep doing these on a regular basis. It'll be interesting next year after the elections to see any change. I think we should catch up again and,
for sure.
And it'll just cover what's changed or how it's going to affect property investors. I think we're in for some very interesting
Yeah, it's
times ahead. But I think if for anyone is a property investor or thinking about property investment, when we go into the election, read the policies of each party. Quite important, to be aware of those proposed changes that are coming about. So thank you, Matt. I really appreciate the time you spent with us today.
No worries. Thanks, Geoff. Good to see you again.
Likewise. Thanks for joining us today. If you've enjoyed the podcast and got some great content, as I'm sure I have, please share this episode and post this content out. We'd love you to leave us a review, as it really helps others, property investors and home buyers, benefit from the information that we provide and the content that we share. Remember, hit the subscribe button to keep up to date with the latest episodes, and the more followers we've got, the more audience, the larger audience we've got, the more guests we can get on, and it's really about helping educate people on property and property investment. So if you'd like to make contact with Matt or myself, please reach out and we can put you in touch with Matt direct.